my privilege to be here to talk about one of the important topics about the finance transformation and the leaders, how to move the governance and audit from compliance checklist to a source of confidence. We all know compliance is reactive. Compliance is focused on how to meet the standards, how to make sure that the organization is safeguarded against the risks and the legal issues, and how to avoid penalties. When you talk about confidence, it is about the trust. Trust in the financial statements, the financial numbers, trust in internal controls, and trust in the management actions. And when you talk about confidence, it accelerates the strategy, it accelerates the value. So with that scrutiny that the boards face with the regulatory shifts, I think the CFO's job is just to reimagine how to convert or how to translate the governance, the audit, the compliance as a strategic driver for the stakeholders' value and trust. With that, let me just ask a few questions to the esteemed set of panelists who are sitting next to me. Vineet, if I may ask you, based on your experience, how do you evaluate and manage the risks associated with digital transformation initiatives from a governance standpoint?
From a governance perspective, when we see the digital transformation, we really don't only take the digital transformation project as a technology event. What we also see is making sure that the digital transformation is aligning with our strategy, aligning with our vision, as well as the impact what we want to create with that transformation. So considering that, when we do the evaluation of risk, we ensure, first of all, that the transformation journey, what we are taking, is delivering value. It's a strategic fit to the vision of the company and is ultimately result in the benefit which the organization is looking into. Evaluation of risk is taken care. At least we are making sure there is no, we are taking care of data privacy, cyber security related risks. So we are covering all that. So considering that, the risks are identified and a proper governance mechanism is put in where we are taking care of the oversight, we are taking care on the cyber attacks. If there is anything which, from a cyber security perspective, risk associated, we are covering that as a good monitoring system. And also ensuring that we have a proper mechanism to review and keeping a track of all the risks associated with that. So that's how we cover up, and a full governance mechanism, list of activities, proper frameworks, which not only helps us to meet the compliance framework, but also the regulatory requirement. So that's what we focus in our governance schemes.
Yeah, thank you, Vineet. Linu, if I may ask you about, from your experience, what are the governance practices that you believe could serve as the benchmark for CFOs to build greater confidence?
Can you hear me? Am I audible? Okay. So first of all, it's a privilege to be here. And I heard Sugata sir from Azure. He was people were complimenting him. Yeah, he's looking just the same for past 7 years. Not much change. But for me, I'll have to go to the parlor to maintain that glow, because he's from renewables and I'm from gas power. And renewables is actually doing pretty well in terms of government's focus in renewable power. But when it comes to gas power, there's a lot of ambiguity around government policies, pricing, and of course, availability of gas is a challenge. And we heard a lot from the previous speakers that there's a paradigm shift in the way finance function has evolved from being a compliance checker to being a strategic collaborator. And so has the view on governance, right? So we all know about financial governance. We have to, that's something which is non-negotiable. All of us are supposed to have that integrity, that ethics in financial governance. For me, in my industry, along with the financial governance, I have to stay resilient and I have to stay ready. What that essentially means is my risk management has to be very, very strong. My capital allocations have to be very, very strong. So for financial governance, I just want to mention, Anurag, we partner with PwC, and we've never faced any issues, whether it is GST compliance or withholding tax orders. PwC has been a very strong partner. Coming to the risk and strategic allocation piece of it, for me, we operate globally. So we have global footprint. We operate in Middle East countries. We operate in regulated countries like Bangladesh and all. So we have to be very vigilant about the changes in the regulations there, keep a tab on the availability of gas. And especially talking about India, right? We have seen IBC kick off, right? Fortunately or unfortunately, there have been certain instances where the customers have been referred to NCLT code. So we have to be ahead of these things that's happening in the market. So it's a combination of capital, it's a combination of the rules and regulations, the market, and hence this risk management and capital allocation is very important for us. So we manage very strongly from a governance standpoint. And the other thing is stakeholders. So we keep them updated, whether it is the shareholders, the boards, the audit committees. We consider them as our strategic partners. So as a finance professional, sometimes I'm a collaborator, sometimes I'm a translator, sometimes I'm a mediator. And yes, I'm enjoying this journey. So definitely governance has evolved over time. And for me, staying ready, staying resilient is one of the key things that I'm focusing on.
Thank you, Linu. Suparna, if I may turn the mic to you, can you share a few examples about good governance practices, which could serve as a benchmark for the CFOs in today's world?
Well, good afternoon, everyone, and thank you, ETCFO, for having me here amongst this esteemed panel. Some takeaways, some giveaways, and that will be our journey. I mean, that's what we'll be discussing for the next 40-odd minutes. So I'll make a statement, and probably you all can correlate to that. Revenues and profits of an organization, they build the organization, they build the company. But what builds a legacy? That is governance, trust, and transparency. And we have seen certain big industrial houses in India and across the world where legacies have been built. It's just not about the revenue and the profits. It's about building legacies of trust, transparency, and governance. Now, with that goal in mind, or with that objective in mind, there are a few key things which are what a CFO needs to do in an organization to have a trust and transparent structure of governance, and with respect to the operations as well. First is setting the tone at the top. I always believe that what happens in boardrooms, what happens within the management, the guidance, the objectives, the ways the management wants to run the organization, that is very important, how to set up a culture of governance in an organization. With that, once that tone at the top is set, then comes to the, outside the boardroom, what do we do? Many things that we do outside the boardroom. One is the people who have come out from the boardroom, they now need to cascade that culture and accountability within the organization. So with that kind of a culture which is flowing from the top, there are a lot of things which fall in place automatically. There are things which, there would be, say now, an investment in automation of, compliance, like using a compliance tool. That is a very initial thing which a CFO will always do to, to take care of the compliance objectives of the organization. Next is what kind of an organization structure, whether there are any conflicts of interest or not, whether there's a job rotation or not, whether the systems, processes are there or not, and of course the teams within the organization. It's just not only about the audit, finance, and compliance teams. It's also with the rest of the organization, what kind of processes and operations are going on, and in case there are any gaps, and that's where the CFO or the key people of the finance team really need to exercise good control in terms of monitoring gaps, because however much we might automate something, there is always a gap. That's where the human intervention, that's where our wisdom as people come in. So that thing has to be set into place. And finally, as part of the steps, I would say monitoring and doing a corrective action for which a very proactive and agile mindset is required from the finance team as well as the other operations teams. So this is from my side, that what are the key things that a CFO would do to ensure compliance within the organization.
I know you touched on some very important words like trust and transparency, and we'll deliberate more on that. But let me just shift the focus to Meghal now, and I would want to take you to the future and just understand from you, what do you see as the biggest challenges for CFOs when it comes to governance, say for the next 3 to 5 years?
Hi everybody, thank you. It's a privilege to be here. So thanks ETCFO. I think as Linu said, the role of CFO has really evolved. Yeah, many years back we were more like bookkeeping, conscious keeper, and now it's more like catalyst who is driving growth. But having said so, I think compliance, audit, risk management, all that is very inherent and bedrock of how strong we can build a business. And all of us know that we are living in a VUCA world. Every day some new event happens and it impacts the business. So again, when it comes to, I think over the next 5-7 years, some of the big challenges what I see in the space of governance, I would categorize it first as, I think, regulatory fluxes. I think as businesses are evolving, there is also a lot of regulatory compliances. I think many times it's an overload of compliances or information what we need to comply or give to the government, whether it's from SEBI, whether it's from company law board, whether it's from our accounting standard perspective, or equally, I think as recent as GST 2.0 reforms, as part of FMCG company, it's a great reform, but government has only given us 2.5 weeks to implement this last. Whereas GST 1.0, we got 6 to 8 months, right? So all the companies are actually trying to work out how we can pass on this benefit to the consumers in the right way. And me and my team, along with cross-functional team, we have been working overnight to ensure that by 22nd we are ready. So I'm just saying that many times there are good steps, but then it's more in terms of the timeline, the clarity, which would not be there, and hence it's always a bit of a gray area with which we need to proceed and manage the compliances. That's, I think, the first bucket. The second bucket, what I also see is more and more non-financial disclosures, particularly in the space of ESG, is picking up momentum. And many of us in the finance field are not equipped in terms of what is ESG accounting, how do we collect that information, how do we really shape up the right reporting. So to me, I think that's another area where I think over the next few years, many companies will need to nurture, build that capability to ensure that, particularly in the area of non-financial disclosures and ESG, we are equipped as a finance function to ensure that it lands with the right governance angle. The third area, which I think my fellow colleagues dealt on, is around digital transformation. Now, many of us have been leading the entire digital transformation space in our company, but along with that, whether we are talking about AI or automation or use of various tools and processes, I think with it comes the cyber threat security risk, with it comes the data leak or the data privacy, which I think becomes very important for us as a CFO in terms of having the right governance framework and the risk management approach to ensure that it does not go out of control or it does not come up as a surprise. And then the last one, Anurag, which I believe, while these are all some of the known risks, but we will not be able to manage this unless or until we have the right talent, to manage that. And again, I think many times we see that a controllership role is a very mundane a role, but it all depends upon how we make it exciting with the kind of financial landscape, with the kind of changes what's happening. So it's also about managing and having the right financial skill set, but equally the person being able to have a foresight and equally think through in terms of the leadership attributes what will be required in the coming years to manage this. So this I feel are the four broad buckets where we will see challenges and where we need to gear up as a finance community.
No, I think that's pretty comprehensive on that, and I like the word you use the word gray in your conversation, and I think as CFOs you must be dealing with the gray word pretty much every moment of your life. Let me now shift to Saurabh yourself, and just from a different lens, I would want to understand how does the board diversity influence the governance strategy, and more particularly when promoters are not involved. Would you like to throw some light on that?
So, Anurag, thanks for the question. So, see, we are living this for last 2 years now, and because we at Coforge, we don't have a promoter, and the largest shareholder is Motilal, who is also an institution. So, typically, let's take a step back and shareholder psyche, investor psyche. How do they invest in any company? If it's a promoter-led company, they will invest. See, financial performance, growth, earnings will come in much later, but they invest in the promoter, they invest in the management team. Now, when you don't have a promoter, assuming take a promoter out of the scheme of things, then what are you left with? You're left with management team and the board. So, and our belief and my belief personally is that Indian capital markets today and the kind of valuations and the number of companies which are coming through IPO, they're moving towards like US capital markets, wherein the companies will be promoter-less, they will be run by board and the management team. And over there, having a board which is diverse, having a management team which is diverse becomes more and more important. In our annual reports, all of us do board assessment. I've been in this company for 14 years, 20 years of total experience, but until last year, we never spent enough time on looking at board assessment. But now, when we talk to shareholders, the first question is, how is the composition of the board? We understand the management team, but who is calling the shots? So, board diversity is going to become more and more important, and the companies, corporates in India, even SEBI, they have to come up with few things wherein this is becoming table stakes, this is becoming important, because shareholders' trust will only be there when you have a board which has their own recognition in the market. There's a management team which has a proven track record. So I think this is going to be the way forward for the Indian capital market. That's my belief.
Yeah, I think you're right. And just speaking from the examples that you cited from the Western world, I think this is pretty much common. Linu, if I may ask you about the role of audit in advancing the risk management, more particularly about the innovations that you see in this space.
Okay. See, we are in power industry. Now, just imagine if there's a blackout in this room. It'll be totally chaotic. That's the importance of electricity in development of a country. And hence, there's a lot of compliance, there's a lot of vigilance, and there are a lot of laws that we have to really manage here. So for us at GE, we have a very strong audit staff, internal audit. Even our external auditors are very good. But I would like to double click the internal audit teams that we have. So we involve them. They are busy throughout the year doing audits, not only on financial aspects, projects, but also on processes. So in a couple of years, we have actually we have run some Kaizens or value stream mapping analysis, wherein we have identified flaws and also come out with processes where we could even save time, right? And time is money. So that's the importance of auditors. If you treat them as watchdogs, they'll be watchdogs. But if you extract the best out of them, because they are subject matter experts, actually it can transform the whole organization. The way they look at the organization, the way they look at the problems, it's totally different. So I feel when you talk about innovations, it can be as simple as making the audit process agile, so short cycle, quick outcomes. And I think Sugata sir spoke about EPC projects. So in power segment, in power industry, we have long EPC projects, highly capital intensive projects. So these run for years together. Unless you have some sort of financial simulations, strong tools, you will not be able to predict the cash flows for future. So that kind of predictive analysis is very important, and we invest a lot in such tools. However, because the market is so volatile, you have wars happening here and there, supply chain disruptions is happening here and there. On top of it, you have Trump who's imposing tariffs here and there. So what I'm trying to say is it's so volatile, it's so unpredictable that you cannot have just one tool, roll it out and okay, sit back and relax. You need to have those enhancements. You need to have that upgrades often to address this volatile market, be ready, and it helps us stay resilient. So to answer your question, innovation can be small or big, but yes, we partner with our audit staff a lot. And I'm so proud to say that some of the leaders that have come for the industry, and I think Arnav has left, even Arnav is ex-GE. So we have rolled out so many leaders into the world, and that's the power of GE. Yeah.
Thank you so much. And I like the word agility you brought in, and certainly analytics, which is the buzzword that we hear pretty much in every conversation, and rightly so. Vineet, if I may ask you about building on that relationship part, how do you build and maintain effective relationships with the external stakeholders? And I would want to expand the community to the investors, the bankers, certainly the auditors have been there in there.
I think so with the changing and evolving business conditions, I think it's important to keep them, keep them updated on a lot of things. So I think overall, if I focus on the investors, one is communication is very important. Be very open on regular updates, regular communications, which we do through investor calls. We also do one-to-one meetings with the investors. So keep updating on what we are doing on the business side. Other thing important is to have no surprise policy. Keep them updated if we feel there is something which is going to come or going to impact the business, at least update on that side, which is important. So regular communication, be very focus, a lot of focus on being transparent across with your processes as well as in your annual reports, and transparent about the data, what the things we are working on. That open communication is important, and what I feel at the end of it, whatever we committed or what we ultimately said, are we delivering on those promises? Those become very important because that gives the at least the benefit to the investors that they're relying on what we are saying, what we do, what we say. So those things and ultimately ensuring there's open channel, open communication. So that's what we keep working on, and not only take them as more compliance perspective, we also look at from their side as to what they think, what we need to do, be as a strategic advisors. So it's a full open communication on both sides, and that's what we focus on.
No, that's very good. And to me, the confidence that the management actions are displayed, I think they are very, very important for this trust building activity. Suparna, if I may ask you about, we talk about the talent and the human capital, which is fundamental to any organization, and more particularly for the CFO's overall org structure. How do you drive the audit teams for innovation and maintaining high ethical standards at the same time?
Thank you. It's all about teams. It's all about the organization structures that we operate in. And having the right people at the right place with the right capabilities is extremely important. The field of governance, audit, etc. is a growing field in terms of the value additions that they do into business. I myself think that the governance teams, the audit teams, they need to be critical contributors in the operations of an organization. So suppose there's something new happening or some change needs to be done, and there is a standard operating procedure which has been defined. I would always want that the audit and compliance teams also be a part of those discussions, and they could be giving very important inputs in terms of framing the policies and practices of the organization. So one is definitely at the most important, the softer point, the most important point is the importance of that team. And with that now come the other things. The other things, of course, their talent, continuous learning, technology and AI literacy, how that can help in business so that they are able to implement technology in the respective functions and in the organizations, keeping abreast of the developments which is happening outside. And recently we've all, for the listed companies, and I've also gone through, a little challenge was, putting the RPT systems into place. And that's a very recent thing which has happened, and we've all gone through that. So also how to enable technology in, driving RPT or any new change which comes within the organization, that's important. Then one very important thing is to keep the job interesting, and I also mentioned earlier of the job rotations, different kinds. I mean, keep it interesting. People come into these teams and people go from here into other teams. So, there's a cross-pollination of the ideas of compliance, not only within finance and audit, but also within the other functions of finance like tax, treasury, etc., business finance, and also outside. I mean, somebody goes into a role outside finance, that person also carries that into his or her mind. And one very practical point which I would like to make is that when in doubt, ask the experts. So that's very important. We cannot be having a compliance issue by relying only on ourselves. So there's no embarrassment. There's nothing, bad about asking. So when in doubt, please ask the experts. And that's how the talent within an organization keeps developing in this critical function.
I think I like that. That's the punchline. And at PwC, we do use this phrase so commonly. When in doubt, please consult. So I kindly, can easily correlate with that. Saurabh, now turning back to you, you are running a technology company, and we do hear some of these complicated words. Obviously, I do not understand everything about blockchain or AI or predictive analytics, but how do you see the role of these technologies in the governance space?
So, see, technology has been playing a significant role across sectors, organizations, across the globe, across countries. And with AI coming in, a lot of predictive analysis is now coming into picture. And what I have seen, at least personally, is that a lot of investors have actually started using AI to analyze your financial statements. Now, when you go on an earnings call and there are 400 investors, brightest of the brains across the globe on your call, and if they are using AI, a technology, to find out every single point in your results or your annual report, if you are not using it, you will be struggling. Because what happens is, and we are running a project within the organization wherein we are doing the same thing, looking at AI to analyze the financial statements, find out the exceptions so that your disclosures are far more prominent. If you understand that, okay, there is something which is going off the mark, AI, because it is predictive, it will help you, at least it will throw that as an exception. And when you're on the earnings call meeting investors, you will be able to answer that. So that when you're in front of them, there is nothing like no exam question, out of syllabus question, and you're not prepared for it. And that helps in boosting investor confidence. And it also reflects in the PE multiple of the businesses and the companies that are running. Similarly, AI or technology is being used in compliance governance framework. There are ever-changing laws these days. There is no human who is operating in say 40 countries 100 legal entities can track all of it humanly. Even if you have a manpower, you will make mistakes. Having technology, identifying the changes in the law, and more importantly, what is relevant to you, because we all like to read the changes in the law, but what impact it has on your business, that AI is coming into picture. And the AI and automation, these are two separate things. Automation is producing financial statements. AI is giving feature leaking view or throwing out exceptions. So that is becoming more and more prominent. If we don't start using them in our business, and it is not something which will happen overnight. It will take time. We are doing use cases for our clients, and a lot of clients actually have started doing AI on the financial statements and managing investor relation functions. I mean, it's very different, but rather than just the operations, everyone is concerned about governance, making sure they're passing the right message to the investors. So that is where we're seeing a lot of use cases in AI coming up, which we are implementing for our clients. So it is the next big thing right now.
And you're right. These emerging technologies are touching all of us in our everyday's life. Meghal, now we have heard a few times about the word culture, and I think that is, to me, that is the fundamental piece. How do you see this culture of transparency, governance can be inculcated, can be encouraged, just to achieve the overall objective?
No, I think it's a very important question. Unless and until we don't build a culture of doing business in the right way, yeah, all your strategies and everything can be in a PowerPoint deck. But I think if you don't build that culture, then I think a lot of businesses might be faced with surprises and reputation damage and all of that. So it's very important. I would say that few elements in terms of how a strong culture can be built, more in terms of having transparency and full accountability in the organization. So at Mars Wrigley, I think we follow 5 principles. So it starts with tone at the top. I think what Suparna mentioned, it's very, very important that right from the global to region to the unit level, everybody is talking about the Mars 5 principles, doing business in the right way. And I would say that I, as a CFO, have also gone through a kind of a learning, because earlier, me and my controller used to take this burden of, we are the one who have to establish this culture of governance and transparency. But I think once we involve the larger leadership team and some of the other people in the organization, then I think both of us felt a bit liberated that we are not the alone, but it's actually a kind of a village which takes in place to kind of raise a child. So similarly, I think it's responsibility of the entire leadership team in terms of how do we inculcate that culture of trust, transparency in the organization. And it starts with tone at the top. So that's first. Second, in many organizations, you would also have seen is the culture of I can be me. It's a speak up culture. So how do you encourage more of your employees or associate to speak up in terms of what they feel? In most of our town halls, like the monthly town halls, many times we encourage people to ask questions either through pigeonhole, so that in case if they feel uncomfortable to ask difficult question. But more and more what I have seen is the more you are honest and transparent about the challenge and how we are dealing with it, the more people have started feeling comfortable to ask difficult question to the leadership team. And to me, I think the more difficult question your employees are asking, it does show that the culture is changing, right? Because that's where you care for them. You are talking about trust, transparency, and how together we can build that culture. So to me, I think that's the second thing. The third thing I would equally say, as many of the panelists mentioned, and I also mentioned, I think over and above the financial disclosures, there is now a overgrowing trend around ESG disclosures, about the non-financial disclosures. So that also talks about what's the purpose, what's the vision of the company, and how we are translating some of that vision through some of these non-financial measures. So whether it's around sustainability, whether it's around the social impact, what the organization is creating, and that equally helps. I would say the organization in terms of building the right culture. And then the last thing I would equally say is in terms of the digital transformation, what most of the companies are going through. That also gives a great opportunity in terms of having data on a real-time basis. So whether it's the internal or the external stakeholders, a lot of that data is available through many of the tools, technology, and as Saurabh mentioned, on top of that, if you are able to add AI and some of those, it becomes very powerful in terms of sharing that we are honest, very transparent in terms of what we are communicating. And the last thing, which again I have seen in many companies, is there is something called whistleblower policy or ombudsman, which again gives a opportunity to the employees or say the associates that if they don't feel comfortable about anything in terms of transparency or organization is lacking, then in strict confidence they can reach out to either the ombudsman or to some of those phone numbers, and it will be kept very confidential. So again, through that, I can tell you that in Mars, we have this ombudsman policy and we take that very, very seriously. So even a small, whether it's a confusion or a complaint, it gets to the right people in the leadership team. We get to the bottom of it and we thresh it out. So again, in some of our town halls, whatever best way we can share some of these examples, we share, because we want to encourage people that these are some of the alternates available to ensure that as an organization we are fully transparent and we care for the associates.
No, I think pretty comprehensive view, Meghal. Thank you for that. I know we are standing between lunch and all our guests here. But maybe just to conclude, a quick rapid fire, 30 seconds kind of concluding remarks from each of you. Suparna, if I may ask, start with yourself.
Okay, so one is tone at the top and the culture in the organization. And second is all our stakeholders are today interested in how do we make profits than what it was earlier as to how much profits do we make. So it's a change change in the mindset, a shift in the mindset of what organizations are aiming for.
Sorry, what was the question? Closing remarks. Okay. No, okay. So for me, it's stay relevant, be ready, be resilient, and empower the next gen leaders, because now it's our time to empower the next gen leaders coming up. Yeah.
Yeah. I think for me, I would say that governance compliance is a very mundane routine function. So I think as finance professional, it's in our hand. With so much development happening across on various areas, how can we make it exciting so that we can equally create very good opportunities for some of our key talent? Because many times what I've heard is everybody wants to get into business partnering roles and nobody wants to get into a hardcore role of controllership. So for me, I would say that the important thing would be there is a great opportunity in front of us. How do we convert this into an exciting opportunity? Because unless and until you don't have, a company does not have a strong governance and control, it cannot grow. So for us, the way I see it is having a strong governance and control, it can actually be a growth enabler and a value creation for the business.
I think so. Everybody has covered most of the points. So I'll just say focus on also considering all the compliance and governance always takes the lead, but also at the same time, the business needs to be sustainable. We need to take care of the environment. I think so. That's what the focus should be. Thank you.
I would just say that governance and performance build brands. It's not either or, it is and.
Thank you very much. Yes, I think from my perspective, I had it was a great privilege for me to be here. I learned so many new things. And just to summarize my notes from whatever I've heard here, culture was the topmost thing. And I think all of you echoed about building the culture, building the tone at the top is the fundamental piece. I completely agree about the role of automation, analytics, whether you call predictive analytics or any other form of advanced technologies. That's very important. But I think the important part is how do you align governance and strategy? As you just said, Saurabh, it is and it is not either or. I completely believe that it has to be aligned completely. Also, you mentioned about the involvement of the board in this journey. I think that's really, really critical. Last but not the least, you talked about, Meghal, you mentioned about sustainability, and Vineet, you repeated that. I think that is fundamental because, as some people say, that how much profits have you earned, the focus has to shift from that statement to how did you earn profits. So I think that is really, really critical. And I'm just talking about the larger ecosystem, which is your partners. To conclude, I think communication is the most important thing. You may have culture, you may have beliefs, but I believe that confidence is more of is the perception, and perception can only be shaped by if you have proper communication. So if you have top-down communication, which is speaking through the values of the organization, whether it is tolerated or not tolerated, what kind of shades of gray are you able to tolerate? I think those are very, very critical. I think all of you as CFOs in your respective organizations, you touch pretty much every corner of the business. You understand the language of risk. You understand what value is. I think you have a pivotal role in terms of taking governance, audit, compliance as a driver, which can take, which can contribute to the stakeholders' trust. So thank you, ladies and gentlemen. It's been a pleasure to be here. It's my privilege, and thank you once again.